massive downturn in cryptocurrencies continued Thursday as more investors make an exit from risky markets. The price of two benchmark stablecoins sank below $1. Meanwhile, the price of Bitcoin dropped to its lowest level in more than a year. The massive sell-off in cryptocurrencies has wiped over $1 trillion of wealth in a month. CEO and co-founder of blockchain.com, Peter Smith, joins me now. Blockchain.com is a crypto trading platform. Thank you for joining us, Peter. Now, let's start with what is happening with the crypto market and how long could this volatility last?
Yeah, I think we've seen a broad sell-off in risk assets. And then we saw a internal risk issue inside of the crypto market. That's resulted in a pretty severe shock to the system. Crypto is pretty volatile. And it goes through these waves of accumulation and speculation. We're definitely in a fear-based kind of capitulation wave. And so we're seeing a lot of risk shake out in the market. And then the market is quite short right now. And that's pushed the markets very low very quickly.
So, even stable coins that have been backed by traditional assets seem to be showing signs of stress. Can you walk us through why that's happening?
Yeah, so USDT, which is a asset-backed stablecoin versus an algorithmic-backed stablecoin, there was a short run on it yesterday. It recovered from that short run very quickly, and I think that kind of goes back to the confidence that people have in asset-backed stablecoins. At the same time, algorithmic-backed stablecoins like UST have almost always failed historically, and that failure this week has brought the entire crypto market lower.
I assume it's part of kind of misunderstanding the whole thing, why people would rush to sell. What do people need to know if they're still investing in cryptocurrencies, as I reluctantly continue to do so?
Yeah, I've been in the crypto market for a really long time, and we have 40 million customers that we see trading activity from, as well as thousands of institutions. And I can tell you that there's no better strategy in the crypto market than slowly dollar cost averaging into your position and then holding on to your position for many years. You have to be prepared to ride out that volatility and ride out the cycles. The mistake that I see people make in the crypto markets is trade on high leverage, take on positions that are bigger than they can handle the risk comfortably, and all too frequently get stopped out, in too short of a time frame. So the best thing that you can do is slowly dollar cost average in and hold on to your position for a long time.
That means buy a little bit and hold on to it.
Just buy a little bit each month, hold on to it for 4 or 5 years, and you'll have a very productive investment strategy. But it's like anything else in life. If you try to get rich quick, you try to short the market, you're inside of a thunderdome of a very volatile market.
You crash. And Peter, final question. Are you coming to us from the blockchain?
No, I'm coming to us from one of our offices. Very old-fashioned.
It does not look old-fashioned. It looks very futuristic. Thank you so much for your time and your wisdom, Peter.